Hello and welcome to the Boom Doom Zoom show. I'm Peter Switzer, and joining me as always, well, not as always, he wasn't here last week, is my colleague, Paul Rickard.
Thanks, Peter. I think I've missed 1 week, but anyhow, I think it was
Oh,
great,
yeah,
great to be back.
Right? The crowd missed you as well. The number of letters that people wrote in, but people started writing letters, not just emailing, complaining, where's Rickard, where's Rickard? Anyway, he's back, ladies and gentlemen. And Paul, what's happened to the market today?
Well, we're getting a lot of company reports. This is right at the end of the season. Big movements in a few of them, Peter. Yeah, interesting. I think the Zip one is interesting. I think the Afterpay result, we won't see how that translates because it's in the trading halt because of a bit of a capital raising. But yeah, some big movements out there. Good performance by Ramsey, which I guess is on the reopening.
That's overdue, isn't it, Paul?
It is overdue. And A2 Milk's gone the other way with yet a fourth downgrade. So
and that's unusual. 3 is more usual, isn't it? 4 is
3 sort of, yeah.
I mean, me a little bit. I'm an A2 fan.
I guess we might get a question on that, but look, it's a funny market because we've got BHP above $50. We've got commodity prices really strong. The Aussie dollar looks like it's going to crack 80 cents.
Well,
which we've been talking about that for a long time.
I didn't think BHP would be over 50. You and I both thought holding around low 40s was a good strategy.
I didn't think BHP would get over 50, but we have been right around, the two big themes. Well, two of the big themes. One is obviously the steepening of the yield curve, and secondly, the Aussie. What we probably haven't.
Banks, well, we were bank lovers when people wanted.
Yeah, what we haven't probably got quite as right is this rotation trade, which just continues, but people just rotate so quickly. What's been one of the interesting things about reporting season so far is that some of the first and second day movements haven't carried on. In other words, some of the companies that reported really well, had good rallies after the thing, have actually subsequently got sold off. Some of the companies that reported badly, not as well, suddenly it's a week later being bought. So normally that goes the other way.
Yeah, and I think the classic case is Zip, and I was a bit annoyed to hear it dropped a fair bit today. I was down 8% at one stage, but as you were pointing out earlier, and I've looked at the numbers as well, only a month ago Zip was $7.42. It's $11.20 or something, $11.07 now. Peaked at $13.92. A hell of a lot of fund managers would have taken profit for this rotation trade, wouldn't they? The tech stocks have gone a less favoured at the moment. And they're chasing stuff, and it's such a surprising year. They're chasing travel stocks again, but there are some lower order ones that will be popular as well. Like, for example, Ramsey will probably get a few more friends now, Paul.
Yeah, I mean it's also, I guess you could say is a bit of a bet on the reopening trade.
Yes.
And look, I'm a bit surprised. Just show me Ramsey RHC, John. I'm a bit surprised at the reaction to that today. It was okay, but. Probably doesn't show you, but it's up 6%. But maybe which more cool heads will come back tomorrow. But look, anyhow, we've got a lot of questions no doubt.
Yeah, let's get going.
We're getting a lot of action in individual stocks.
Yeah, okay. A couple of reminders. If you want to, basically text in a question, you click on the Q&A and type out your question, or click on the raise hand to ask your question live using a microphone. When requested, you will need to click on the unmute button on your screen and we can talk to you, as we do with some regulars who really do like to contribute. Okay, Paul, let's kick off the first one. Max, thoughts on EGR and AVH?
I've got absolutely no idea about echograph, so that's a take on thing.
Right. Well, didn't they report echograph? I think they might have reported our small cap conference, Paul. I think I remember you saying you quite liked it, but
I got that one. What was the second one?
The other one is.
I mean, that's gone through
AVH.
Oh, Vita.
Yeah. Yeah. Now, I got a bit of a view, and I think I asked both Julia and June Bailey on the TV show on Monday. And June Bailey was. She wasn't as keen, but she wasn't going off Avita. But Julia was a lot more positive, and her argument is something that you and I have talked about, Paul, is that Avita is a company that, because they're in sort of this skins, the spray on skin, the burns things, and all those sorts of things, a lot of that stuff has been put on the back burner in America in particular, because I mean, they're listed in America, and it didn't really help their share price listing on the NASDAQ. But a lot of their stuff, they haven't been able to actually do their kind of operations and whatever because of the coronavirus. And Julia reckons that's an opportunity for Avita. So it's 50-50. I don't know what the analysts are saying.
Well, I don't think there's much there. I think Tony Featherston covered it the other week. So have a look at.
I think Tony quite liked it.
I think Tony quite liked it. Let me just bring up his comments.
And Paul even was making the point earlier that, you know, a company like Ramsay, it too had a lot of its normal business put on hold because of the coronavirus. And as the infection rates go down, as they are around the world, and the vaccinations take place, you know, Ramsay's probably getting a little bit more business usual.
Yeah, I'll just bring up. Maybe we can move on.
Yeah,
I'll come back to Avita. I'll just come back to that.
Paul, someone's criticising my pace. This one comes from BVF Johns. Do you have any thoughts on uranium stocks that are interested in clean energy? There is a bit of a movement on at the moment to say that uranium stocks might have a run in the sun again. But at this point in time, I don't have a company that I want to throw my interest behind, Paul.
No, I don't think anything's going to happen to uranium stocks or uranium in Australia. I think the politics about it are over, despite some of the talk. And I wouldn't be looking at uranium stocks on that basis.
Do you think it would be a good idea to get one of our experts to have a look at, Paul, the potential of uranium and what companies are the best placed?
I don't think there only have three. I don't think there are, Peter. I think that's sort of. I just think that this is. I don't think it's going to happen. Just can't find Tony's article. What's John? We can't. There's a.
John can do that. We go to the next one, Paul. There's an anonymous attendee. Thanks for the great show. What a nice person Anonymous is. Most of the companies have reported. What are one or two stocks you like which have sold off after reporting?
I've just asked Tony Featherston to do that for next week. So next Thursday. So it's beaten up buys, I think is the question. So let's come back to that. We'll have
I do have one.
You have one, yep.
Yeah, I do have one. You know, the only one that's really disappointed me in the ZEET stocks of mine is Elmo Software, which I really like. And I interviewed the CEO, Danny Lisson, yesterday, and we'll show that on Monday's show. And the one thing I keep getting confused, I used to tech stock, so it's lost a bit of momentum because of tech stock. But a lot of journalists are writing, like, this is a company that benefited from the stay-at-home thing. And I said to Danny yesterday, did you guys benefit from that? He said, no, the opposite. He said, we really benefit when business is back to normal. CFOs aren't trying to cut costs all the time. So I just think this is actually a sneaky reopening type stock, which he reckons that the company's trending well. And so it was $7.08 a month ago. It's now $5.15. I like ELO definitely as a one. And I'm going to say one.
Okay, just go back to Avita. So Tony wrote about that on the 11th of February. You'll find it on our website. He likes Avita.
Yeah.
So he's saying that was an article called "A Beaten Up Burn Stock." Probably why you may have missed it, but he's bullish on Avita. The other two he listed in the same category. These are ASX listed burn care stocks. The other two stocks he listed were also Polynovo, PNV.
Because he also is in the burn space.
Well, in that sort of area, and Aroa Biosurgery, which is code ARX.
Yeah. I've got a funny feeling Julia liked Polynovo. Jimbo Lou liked Polynovo better than Avita. But okay. Let's go to the next one. So your thoughts on Telstra? Anonymous attendee, Paul?
I think Telstra's okay. I wrote about that. I mean, it's what are we off? When I wrote it was 3.30. It's paid an 8-cent dividend, so it's got a little bit caught up in this bond hurrah. What should I say is a bit of nonsense, right? Bond yields are going up, but we're just playing follow the leader here. You know, Telstra sometimes thought to be a bit of a bond proxy stock. I think Telstra's okay. I think
me too.
I think I think you got patience. You know, I think you can see Telstra over the course of this year back up to 350, 360.
Yeah.
But I don't think you need to, you know, you can appear to chip away at Telstra slowly. I think that's a pretty good chart. Don't, you know, Telstra's, I think, doing, you know, starting to make some goals out there.
Paul, this bond crap that's going on at the moment, excuse the French, is logical. The long-term rate should be going up because they're 10 years out. We're not going to be in Miseryville for 10 years. The short-term stuff's not going up because inflation is not rising at the moment. It eventually will. I've actually written that. I think the Reserve Bank said 3 years before rates rise. I think we'll raise it in 2. There'll still be small rises. There won't be big rises. So I think this is a buying opportunity. Some really good companies are being sold off because of fear around the bond market's going to go, ballistic crap. And also there's this rotation trade. And so good companies are being sold off. You like Wesfarmers, you think it's gone off the boil. So there are plenty of companies, I think, they're going to be buying opportunities because of this. And I think Telstra probably will see 350. So if it's 315, probably not a bad buy. All right. Next one, Nigel. Oh, no. Where is it? Oh, yeah, Chris. A2 Milk, guys. What's up?
Yeah, that's the disappointing stock where I've been wrong on. It's had its 4th downgrade.
You're only temporarily wrong, Paul.
Yeah, I mean, the trouble with A2 Milk, Peter, is I just don't know whether you can trust what management's saying to you because they keep on. When a company consistently downgrades, you sort of say, well, are they just not telling you the whole story, right? Or just trying to always, they're optimistic, right?
Or don't they have good vision on their company?
Well, still, the only thing that concerns me in this report, looking today, is still the revenue still in the second half rather than the first half. Well, that's always a worry. It's going to get better, guys. And secondly, there are still a few management and changes and a few people leaving and the marketing person's going, whether she's been fired or, I don't know.
The performance might justify it.
Yeah, well, I don't know. It's not a marketing story. I mean, it is a marketing company, but at the moment, part of their buyers are locked out. So
okay, I'm going to do an A2 Milk inquiry because I quite liked it. I thought at the price, this is going to be a rebound. But that's going to be an inquiry for the show.
The last. Today's that downgrade to put it in context. All right, on the 18th of December, right? Yeah. It's only 2 months ago. They told us that revenue would be 1.4 billion to 1.55. Today they're saying it's in the order of 1.4. Okay, it's a bit of a downgrade, but that's only 2 months ago. Yeah, bottom range. And they also said their margin would be 26 to 29%, which is sort of how much they're spending to generate the revenue. Yeah. Back on 18th of December, today it's in the order of 24 to 26. So it's not it's only two, but it's only 2 months on. It's not. It's still, and then
what would you have expected, Paul?
I think after 3 or 4 downgrades, you start to have fucking management to tell you the worst case, so they can surprise on the upside, right? I don't know. You just lose confidence in what they're telling you. Okay, so I'm probably going to have a dabble in A2 Milk in the next 24 hours. Yeah. But I'm also worried about whether it's time to dump it. I mean, sort of like it's. I still think because it's a category leader, has great potential. There are some positives in what it does, right?
Yeah, and the China tension and the tourism negativity around coronavirus hasn't helped this company, without a doubt. The more Chinese tourists we have here, so basically, as soon as Chinese tourists keep coming back here, I think that share price will start rising. But how long is it going to take? Could be 6 months. Could be a year. All right, Peter OB, your thoughts on ALD, especially with rising oil price, and SLA, especially after Virale's approval in Europe. So the 2 companies, Paul, ALD.
Oh, Ampol.
Yeah.
Ampol is essentially a retailer with some refining operations still. So you're really playing how good Ampol is at running its service stations and convenience stores, right? Yeah. It's almost out of Ampol, of course, is the old Caltex. It's almost out of refining. I think it's still got Linton and Brisbane. Someone will correct me if that's the way you pronounce it. And it's almost out of refining. Although that refining margin is hard, and all the refiners have suffered, and the government's now subsidising that. I think they're putting a cent a litre or something in that to help keep them here. Get one or two left. I'm not sure Ampol signed up for that.
Is that my
so I don't think rising oil price. Rising oil price, if it affects motorists long term, is bad for business. But I don't think it's really an oil price story at all. This is about a business. This is about a retailing business now, right?
Okay, SLA, Paul.
Look, that one we'll just have to take on notice. I don't think I've ever come across SLK. So
Silk Laser Australia.
Yeah.
This is not one of mine either.
yeah,
So, all
SLA, right?
John, put
SLA.
it down too.
I'm sorry, guys. There are 2,500 companies. We can't know everything about every single micro cap out there, right? I've never come across it. Right?
But Pete's got the Viralise angle to hang. Gents, do you think the current BAP falling price is due to its recent result or what? Yeah.
So what are we talking about?
Babcock. Yeah, and it's been doing well in terms of its revenue.
It's getting the rotation here a little bit the other way. So Babcock's reported really well. If we all start to travel overseas again quickly, then maybe so much money won't go into second-hand motor vehicles and people doing up their cars. It makes most of its money out of the trade. That's where it's really a trade.
And it really has had a nice run, hasn't it?
I think they're a great company, Babcock. I just think Babcock's in that sort of breathe category that you sort of, if you look at JB Hi-Fi, right? It reported brilliantly, got a great result after the thing went up. It's gone ex-dividend, okay?
Very similar, really.
But it's come off because everyone's saying, okay, well, maybe now, we're not going to have as much money being spent at their stores and we'll go overseas.
And people are going to go out more. Can we put AP Eagers as well? Because AP Eagers and Babcock, they're sort of, they're kind of in the same motoring space. And so they've come off too, haven't they? They've all come off because they did really well during the stay-at-home phase, and we're moving into the rotation phase.
Yeah.
So eventually, the rotation phase will go too far, and these stocks will be good value again.
You just have to be patient on this stuff, right? I mean, should you have taken profits possibly? But I think on all these companies, they're holds, right?
Yeah.
They're actually looking to rebuy, but just don't expect the market to immediately. But say you're right, 24 hours after, it might take 2 or 3 months before you're right.
Yeah. All right, let's go to, I love this guy. Dan's got to go.
We got any hands yet? We normally would have a hand.
No hands, Paul. Yep. But good for reminding people. I love this guy, Paul. Dan's got to go. Hi, guys. Any thoughts on APT news this morning? Now,
well, it's in a trading hold, right? So it's done 2 things. One, it's reported. Which, looking at the report, growth rates are probably about what the market expected. It's talking about its new thing, Afterpay Money. It'll start to become a bit like a bank, I think, is sort of what it's talking about there.
Well, it's going to take on some aspects of banking.
But it is raising money through a big convertible note issue to increase its share of the US business, and that's why it's in a trading hold. So we haven't had a reaction to its profit result. But I guess if you look at Zip, Zip had higher growth rates than Afterpay. I reckon you probably might see just a bit of weakness in Afterpay as a result. If you look at it, it's
because Zip's got quad pay in the US, which is a pretty popular version.
Afterpay's earnings, it basically held its. There were some positives, right? It kept its margin basically steady, but and its net trend, there were some improvements, but its loss widened. So it's spending a lot of. It's actually showing, it's not actually demonstrating a lot of leverage yet, okay? Despite all the growth, it's actually having to spend a lot of money to grow.
Can you see how APT share price?
Well, it's not doing anything. It's on a trading hold. So that's
I want to see the trend.
Yeah.
Okay. Let's quickly just have a quick, it's had a nice rise too. It was still not too far off its all-time high. All right, let's go to Craig. Craig, put his hand up. Real trooper, Craig. What's your question, mate?
The question of just your thoughts on the pullback in Appen, APX.
Yeah.
No, I thought Appen was okay. I hadn't seen it down at 1743 this morning. That's another one. Look, it's just. I thought the report was pretty much as expected yesterday, and. The market is just saying, okay, well, some of these high flyers, they're just not positive.
Well, they're a part of the tech space.
Part of the tech space. I reckon at 40, Appen, of course, it needs the Googles and the big tech companies to commission a lot of work from it. It expressed confidence. It's paying a little dividend. I don't know. I think this is another one. I think this is in the value category.
Yeah, me too. I wouldn't mind buying a little bit more Appen on car. But the chart, look, buying it
Chart
now
looks a bit
yeah,
scary,
yeah,
but you know,
buying it now, you're being courageous. But the first decent uptick, 4 or 5% uptick, might be a reason to get in. But yep, I think it's a good company. It's not favoured by America. It's got currency headwinds as well. Most of
it has got
Australia's
currency headwinds. Yep.
earned overseas, so yeah, it's just what happens. You know, I still think it's a good company. IBX, Paul. I've been in and out of IBX. Big thanks to you. Your small cap conference done very well. Thanks very much, Nigel. Where did you see them going at the moment? IBX.
I think you know more about it than we do, right?
Well, you know, but they did present really well at the
They did, yeah.
conference, and I think when you do really well in these sort of biotechs, you got to be really happy, but you got to wait in a sense until another thing comes along, another milestone is reached. But looking at that chart, there's a lot of people believing in the market that there's a company heading in the right direction. And by the way, it's funny, Paul must be having a bit of memory lapse because when they presented,
I
you
do
actually,
like
yeah, you came in and said, these guys are reasonably impressive. But
Yeah.
still, they still have those milestones. And by the way, Mesoblast is just like that as well. But they go over the top and they come off the ball. You got to wait for them to kick that goal. And that's just basically what it is.
That's good advice, Peter.
Yeah. All right, let's go to the next one. Nigel, maybe thoughts on BLY to please sold at the peak recently and now back in. BLY.
Yeah. Perennial disappointer in some ways.
Right. Yeah, but do well to buy start at the peak.
You did well, yeah.
Let's put that down, Andre, for the show, John, because I really haven't looked at that. And none of us really ever asked us about it in recent times.
No, I mean, we didn't say that after you get big movements in oil and commodity prices, that some of these other companies will start to move. I don't know with Monadelphous, they reported, I didn't catch up with it. Just look at ME&D, whether they've, I think that was been a bit, yeah. So you it took a while for it to respond to the price move, which was really sort of November, December.
The analysts quite like, I haven't got my mobile with me to check out what analysts are saying, but they quite like Monadelphous. I'm sure when I did that report during the
I think
week.
that report was a little disappointing in early February.
A lot of the mining services company haven't been going all that well.
It is a delay, Pete, between the commodity price going up, the people restarting work and increasing volumes and so forth. But they're probably also battling, costs because of there's some cost issues, currency issues that are also probably impacting them too.
Yeah, including oil. All right, let's go to Hugh. Your thoughts on NUIX, APX, and CSR.
Well, we've done APX.
Yeah.
Look, NUIX, I think it recently floated. I think this has got a lot of potential, but I don't think there's much new news on that. So I think that you either believe in what they're doing. I mean, this is in the AI space again too.
They had big Macquarie Bank support.
Yeah, Macquarie Bank floated it, but they did keep a fair bit. But you got to ask, why did Macquarie float it? So apart from crystallising profit. I haven't caught up with any news about NUIX too.
From my look at this, it doesn't look a bad entry price if you're not in there, given that it peaked over $11. But it's also part of the tech space, isn't it? The techs have been sold off.
What was the third? We've done APX. What was the third?
CSI.
Maybe that's what we should.
What
Could
is
be.
CSI?
Well, I don't know. Well,
is there a CSI?
I don't know what CSI is.
Well, CSL. Well, let's assume it's CSL.
Look, I'm a fan of CSL. I think the report was really good. I see, it's got currency headwinds. And we know about that. So the Aussie dollar has gone up. It's almost 80 cents, and it's just any of these these companies are going to face headwinds.
Yeah.
I think as you were saying earlier, Peter, if the market's plasma collections, they're down 20% down. That's a bad thing. It's going to be harder, more costs in collecting plasma. But you argue the reverse. If the US suddenly reopens a bit more quickly, it'll benefit from that.
And I think on a 1 year play, 269 is going to be a good price. I must admit, we've got CSL at a slightly higher price, so I'm going to hope it gets down to 260. 260, I would rocket into it on the basis that might take me a year or two to really do well. But when we do well, we'll really do well. Okay, let's go to one Craig Boylan. Craig, how you going?
Yeah, good. Thanks, guys. I just wanted to know your thoughts on NextDC. It came out with a pretty good report. What sort of price target do you see on that? Thanks.
Look, again, another one of these stocks that is doing really well and the price isn't responding, right?
That's a great company.
I think you can see this company over the next couple of years up towards $15, right?
Yeah.
But at the moment, it's sort of categorized in that IT group, which I mean, it's data centers, right? And so, you know, is the demand for data and information reducing? No. Is the demand for great high quality data centers going to fall away? Nope. So it's just probably went up too fast a little bit, and it's just people are sort of saying, okay, well, it's a bit of interest rate stock, it's a bit of profit taking, and there's just, you know, it's just people have moved on to something else.
And Craig,
what we got a price target there from the analysts.
Yeah, the analysts think 22.1% upside, Craig.
To what price be?
That would be $14.21, and they're pretty conservative. By the way, it's, to me, you look at, it's like a step up. It goes up, goes sideways, goes up, goes sideways. And a lot of that is when they're building new capacity as well. So I think, Craig, I think it's in buying territory, quite frankly. All right, let's go to the next one. Anonymous attendee. Thoughts on AMC?
Amcor.
Yep, you like Amcor.
Amcor reported well, but again,
Currency.
Currency. You'll note he'll be here next Friday for our Boom, not our Boom Doom and Zoom, for our monthly webinar. Yeah. One of our Rudy's favourite stocks is Amcor. He's a huge believer in Amcor.
And he's also talking about a dividend super cycle, Paul, and which makes me happy with our Switzer dividend.
I reckon Amcor is just a portfolio stock. No reason to sell. Hang on, you can't do anything about the currency right now. I must admit, I wrote a story about currency some months ago. No one read it, and because but you see the impact, right? The Aussie dollar is going higher. This is one of the stocks that's going to find it hard to struggle if the currency keeps on heading higher.
But it had a top over 16.
Yep,
it's around 1447 now.
Nothing wrong with this report. It hasn't done much this month since the report. It went up, came down.
If you don't hold Amcor, this is probably a good opportunity to get it, I'd say. Let's go to the next one. Arpan, what's your view on CL1, Credit Intelligence? I bought at 3 cents when report on the Switzer report. Good old Switzer
report, yep.
So what is it now?
6.5 cents.
Whoa! Showing once again, Arpan, how great the Switzer report is. That must have been a James Dunn.
It was a special, I guess. Yeah. No idea.
Yeah, we're saying we do endorse.
We like that sort of charts, right? That's got 2 cents up to 6.5 in the space of a couple of days.
And we do endorse the work of our colleagues, but we don't always understand exactly what they've done. But that's good to see, Arpan. Look,
I reckon if I doubled my money, I'd be out.
All right, Martin. This is I just got a few people. I'm personally lending my super fund 500K. As you know, when I do this, I must nominate specific shares I'm going to buy and when I'm going to sell and then to pay back the loan. My question is, could you nominate 4 to 5 long-term investment shares where I can set up loans for my fund for 4 or 5 different shares for the longer term? Thank you, Martin.
Well, I guess, Martin, from your fund's point of view, the fund's got to be able to pay the interest, and the rates you lend at should be on a commercial basis. Can't be too favourable. So I would be ones where the fund, if I was one of the other trustees of your fund, would want to make sure that at least the carry is probably covering the interest cost. So I'd be looking at what I would think is reasonably good long-term dividend payers that are, probably going to be pretty core stocks. Yeah. So I would think something like CBA, Woolworths, may just have the yield. 4 or 5 years, maybe just to get a bit of diversification as well, maybe a bit.
Is it important to specify in the loan arrangement?
No, not stock, but it is. I think you've got to be fair to both parties. You've got to be very careful of those sort of related party transactions. And, sorry, if you are going to do, yes, it has to be a single asset. So it will be a loan for a share. I just think you got to look at it from your fund's point of view, what's fair to the other members or yourself as a member, and do you want to have a fund? Although your aim might be growth, you also want to make sure about the interest cost, right?
Yeah. Now, Paul, but if you wanted to get around doing, say, 5 specific loans,
It's going to have to be on a stock by stock basis.
but
Yep.
what if you selected? No, I don't want to do any business for Switzer dividend growth fund. But if you want to do a fund that does dividends, be one only.
You could do a fund, and you could do a couple of different funds. You could do Switzer dividend growth fund, or you could do an ETF.
Yeah.
You know, which would give you
Like the
market.
Vanguard one.
Yeah, market. Performance plus probably cover the interest cost, right? That's not a good thing, Peter.
Yeah, I'm good at that.
Yeah.
All right. Okay. Let's go to the next one. Have that help you, Martin? Anonymous Tenant, why is Ainsworth Gaming so far behind Aristocrat? Well, that's a pretty hard question. Different company.
Ainsworth Gaming. Well, it's not as good a company. It's
same founder, but different stages of their business.
Yeah.
Yeah, well, the analysts go away. The analysts think 50% downside. So as Paul said,
For which, sorry?
Not for Ainsworth, but Aristocrat on the other hand, 8.9% upside. So it's just
ALL, John. If you look at Aristocrat,
yeah.
I mean Ainsworth gets down all right there. Well, I'm just not sure what the purpose of the question is.
Well, I think it's right. It's on the fall, and Aristocrat. Well, can we Ainsworth again? Sorry, John, missed it. Yeah, it certainly has suffered for a long time, but it's in a nice rebound now.
Right, I think we're getting there.
Yeah, we're going to line up. What time is it? We're at overdue. Ladies and gentlemen, thanks for joining us. We will spin through some of these stocks, and they'll be a part of the TV show on Monday. Thanks for joining us. And next week, we'll be on Friday and doing a webinar with the inimitable, is that the right word?
Very close.
Yeah.
Our good mate Rudy.
Rudy Philippek Van Dyke. We'll see you then. Thanks for joining us.